Hey everyone. All right, let's check out the S&P. And I want to talk about a good way to analyze the S&P, which could lead to good trading ideas. So it's pretty simple. But first, let's look at the S&P here. Well, we got to do an all-time high you can't make a definitive decision yet, well, whether it's going to break or not, because we're within a couple of points. A lot of times there's resistance at former highs because people bought back here. Believe it or not, have been waiting to get out at break even. And here we go way over here, then there's a good chance we get resistance. See how there was resistance here, and then there was resistance here. So markets running into resistance at former peaks, like SPY did here, very common. In short, if you're trading and you're looking to come up with a logical price target and something's going your way, well, if it's approaching a former resistance level or a former peak, there's a good chance it's going to run into resistance there again, and there's a good chance it rolls over. Of course, not a guarantee, but it's a logical way to let the market tell you what to do as opposed to just guessing, because anyone who guesses ultimately is going to lose. You got to let the market tell you what to do. Now, the S&P is made up of 11 sectors. Now, SPY is an ETF, SPY. It's run by State Street Global Advisors. So we are going to go to the SPY State Street Global Advisors fact sheet, and I want to show you this. We go to holdings. We can see here are the various sectors: technology, healthcare, financials, consumer discretionary, communication services, industrials, consumer staples, energy, real estate, materials, and utilities. Now, real estate, materials, and utilities are so small, they don't really affect the broader market, although we do look in there for trading ideas. Energy is really small, less than 4%, but energy can affect the rest of the market as well. So different things are in the driver's seat at different times, and it's important to know what to watch. Being a good trader, a big part of it is knowing what to watch and when to watch, and understanding what is important at a certain time and what isn't, because things change. The sector that's really important now may not be so important in 2 weeks. The sector that was important last week may be important here. So we just got to look. Now, I think the financial sector is in the driver's seat right now. So I think if there's pretty much one thing to watch, well, I shouldn't say the one, but the main thing I'm going to be focusing on this week is this. Now, here's another market principle. But before I go, notice down here, resistance becomes resistance, right? We can see support can turn into resistance. This is buyer's remorse. People buy and price goes lower. They finally try to get out of break even, and the resistance, if there's enough support, enough remorseful buyers place the sellers, turns the level into resistance, right? And then resistance can turn a level back into support, or a level that was resistance can become support, because we got people that sold, and when the price comes back, they go to buy back at the same price they sold at. If there's enough buy orders, then the level becomes support. But here we see a situation where the resistance from February became support. Now, just like down here, people sold, and when the price goes higher, people, and this is market memory, things can stay intact for a long time. An important level can stay intact for a long time. So a lot of the people who sold back here, when the price goes higher, they're like, oh, okay, if I could buy my shares back at the same price I sold them at, I'm going to. So they placed their buy orders at the level that was resistance. So what was resistance in February became support now. And you don't need to be a former hedge fund trader or a chart guru to see this. It's pretty darn clear. Anyone could look at this chart and tell you that, wow, certain price levels are more important than others. And that's one of the main things that really good traders focus on. So how do we know whether this is going to get some follow through here? Oh, by the way, when the market gets down to support level, which is a large group of buyers, some of the buyers start to get anxious that other buyers are going to step ahead of them in line. So they raise the prices they're willing to pay. And that could start a snowball effect, which results in a rally, which, as you can see, is what happened here. Now, just like we can look at the sectors to get good insight into what the S&P is going to do, we can look at the industries that comprise the sector to get insight into what the sector is going to do. Now, the financial sector is 4 different industries. It's really 5, but the smallest one, which I forget which it is, it's only about 3%. But these things have been weak. It looked like they were breaking support. Now they're coming back. And if that level that was support converts into resistance in these, we're going to start seeing in these sectors, then we're going to start seeing the action out here. So let me show you what I mean. The biggest industry here is all right, this is the financial services ETF. So what I'm saying here is this, right? We had resistance became support, just like we saw on SPY. Now, it looks like the support may have broken, but we've rallied back pretty hard. If this rally doesn't have any follow through, this could end up being what we call a false breakout, and they tend to turn right around and come back really quick. So what I've been telling my people is, if you're long, just stay long, ride the trend. Don't question it. I know it seems a little ridiculous, but hey, that's how markets are. But be careful, because I think if we're going to get a turnaround, I think it's going to be a quick one. I don't think it's going to be a slow one. All right, the next industry is the banks. And now we see a situation here where what was support has converted into resistance. So the banks are testing resistance. The support is people that bought here experience the buyer's remorse when it goes lower, and they say, if it gets back to my price, I'm going to sell to get out. So if you have enough remorseful buyers place and sell orders, the level that was support can turn into resistance. That's what seems to have happened here, at least for now. So here's another thing to focus on. So I think the financial sector is going to drive the market. And then if we watch these industries, we can get an insight into what the sector is going to do. This is the capital markets, and you can see this has had a nice rebound. This actually looks pretty good. I would not be surprised to see some follow through there. And then last but not least, we have the insurance industry. Now, this looks like it's kind of breaking out. So we'll have to see. The healthy markets get above resistance, but then they spend some time consolidating while that resistance converts into support, like we talked about. If we just go up and if the level doesn't convert, these could be pretty short-lived moves, and they could come like right back down really quickly. As a matter of fact, you can even see an example of that over here. See, we got to resistance, made a rapid move higher, but then the level did not convert into support, and then that set the stage for a quick move lower. So it's all about the financials. If financials really do start to go lower, we can look at this FAZ, F-A-Z, it's the Drexon Bear 3X ETF. This is designed to move in 3 times in the opposite direction of the financial sector. So if the financial sector starts going down, this is going to go up by 3 times as much on a rough percentage basis. But be careful, because obviously leverage is a great thing when it's going your way, but when it's not going your way, it's not such a great thing. Thank you, everyone, and I hope to see you back here soon.